Going back to your outlook for global growth, we've seen some significant headwinds, as you mentioned earlier, with the easing, with the partial U.S.-China trade deal. But now that there's some new concern following the outbreak of the coronavirus that it might shake global growth. We're already seeing reports from Ford and Toyota that they're planning to shut down their assembly plants for an extra week. Apple is rerouting their supply chains. Starbucks is shutting down close to thousands of stores. Are you worried at all about what the impact would be on the U.S. economy? And do you see that as a significant risk, to the outlook at this point?
So let me talk about coronavirus specifically, and then I'll turn more to global growth more generally. First, it's a very serious issue, and I want to start by acknowledging the significant and considerable human suffering that the virus is already causing. There is likely to be some disruption to activity in China and possibly globally based on the spread of the virus to date and the travel restrictions and business closures that have already been imposed. Of course, the situation is really in its early stages, and it's very uncertain about how far it will spread and what the macroeconomic effects will be in China, in its immediate trading partners and neighbors, and around the world. So in light of that uncertainty, I'm not going to speculate about it at this point. I will just tell you that, of course, we are very carefully monitoring the situation. You know, as you suggested, our framework ultimately is what are the potential ramifications for the U.S. economy and for the achievement of our dual mandate. More broadly, though, if I can talk about the global economy for a second, and if you look at the backdrop, you know, if you go back to 2017, that was the year of synchronized growth. That lasted to the middle of 2018, and then you saw a slowing in growth, which lasted right through the end of last year. The fourth quarter growth globally was quite weak last year. And a number of factors played into that. It wasn't any one factor. There was trade policy uncertainty, absolutely, but also there was the decision by the Chinese authorities to try to rein in leverage and financial excesses. There was a downturn in the global high-tech manufacturing cycle, in global auto production. There were some idiosyncratic strains in some countries like Argentina, Turkey, and then later in Hong Kong and Chile, you had social unrest. So all of those things were playing into that cycle of weakening growth over the course of 2019 and the last half of 18. I would say now there are grounds for what I would call cautious optimism about the outlook now for the global economy. Many analysts are predicting a pickup in growth this year, although still to relatively modest growth rates. And people are pointing to, we would point to supportive financial conditions, the easing of trade tensions, the lower odds of a hard Brexit. The high-tech manufacturing industry does appear to be rebounding well in Asia, including in China. The latest indicators, manufacturing PMIs, for example, suggest that manufacturing may have bottomed out, that they're still below 50 in many jurisdictions, but they have moved up off of their lows. I would just say none of this is assured. As I mentioned, we saw the fourth quarter of last year came in quite weaker than expected. We are not at all assured of a global rebound, but there are signs and reasons to expect it. And then comes the coronavirus, which, again, it's too early to say what the effects will be. Of course, we're, as I mentioned, monitoring it carefully. There will clearly be implications, at least in the near term, for Chinese output, and I would guess for some of their close-in neighbors, and we'll just have to see what the effect is globally.